Welcome to my channel. Today's class is about common size statement. Common size statement is also known as component percentage statement and is a financial tool for studying the key changes and trends in the financial position and operational result of a company. The specific feature of this one is each item in the statement is stated as a percentage of the aggregate or revenues from operations of which that item become its part. For example, in a common size balance sheet shows the percentage of each asset to total assets and that each liability is to its total liabilities. Similarly, in a common size statement of profit and loss, the items of expenditure are shown as the percentage of the revenue from operations. That means revenue from operations is treated as the base year. It should be treated as 100%. If such a statement is prepared for succeeding periods, it shows the changes of the respective percentages over a period of time. If 2 year statement is given, we can make comparison between the 2 years statements. The use of common size analysis is for comparing enterprises which differ substantially in size, as it provides insight to the structure of the financial statements. Interfirm comparison or comparison. Interfirm comparison means comparison within the firm or comparison of the company's position with the related industry as a whole is possible with the help of common size statement analysis. The following points to be noted for preparing a common size statement. First one is we have to list out the absolute figures, that is the exact figures in rupees at 2 points of time, say year 1 and year 2. Then choose a common base. The base to be taken as 100. For example, revenues from operations may be taken as base 100% in the case of statement of profit and loss, and total assets. For calculating the percentage of assets, we are taking the total assets, total assets as 100%, and if it is something related to liabilities, then the total liabilities will be the base year. The case of the balance sheet. Then this is the format of a common size statement. 2 years values should be given, then the percentage of the first year and percentage of the second year. Then there is a problem. From the following information, we have to prepare a common size income statement for the year ended 31st March 2016 and 2017. So as it is the common size income statement, revenues from operations should be taken as the base year. It should be taken as 100%. So the revenues from operations, cost of goods sold, operating expenses, non-operating expenses, depreciation, wages, and 2 years for 2 years is given. So we can move on to prepare the common size income statement. First we have to write the heading common size income statement for the year ended 31st March 2016 and 31st March 2017. Then we have to draw the columns. First column will be particulars, then absolute amounts, then percentage of net sales. Then for 2015, 2016, 2016 and 17. First item is revenues from operations. It is for 2015-16 it is 25 lakhs, and 2016-17 it is 18 lakhs. The revenues from operations, I said earlier, it should be taken as 100% and to also to be treated as the base year. Then less cost of goods sold to find the gross profit. It is 12 lakhs and 10 lakhs. Then in the percentage column, we have to find the percentage. So for this we have to divide cost of goods sold, that is 12 lakhs divided by 25 lakhs into 100, that will be 48%. As said earlier, it is treated as revenues from operations should be treated as base year for all the calculation purposes for finding the percentage. Then same thing is followed, that is 10 lakhs divided by 18 lakhs into 100 gives the amount 55.56. Then when we reduce revenues from operations minus cost of goods sold, that will be 13 lakhs, then here it is 8 lakhs. This one will be 52 and 44.44%. Then operating expenses. Less operating expenses to arrive at the operating income. It is 12 1,20,000 and 80,000. The gross profit percentage is got by the 30 lakhs divided by 25 lakhs into 100, 52. Then 8 lakhs divided by 80 lakhs into 100. Then 1,20,000 divided by 25 lakhs into 100 will be 4.8%. Then 80,000 divided by 80 lakhs into 100 will be 4.44%. Then by subtracting it we get the operating income. Then non-operating expenses, that is 15,000 and 12,000. Then percentage 15,000 divided by 25 lakhs into 100, 0.60. Then 12,000 divided by 80 lakhs into 100, 0.67. Then when the operating income is when we subtract non-operating expenses from the operating income, we get the profit. Here wages and depreciation is not taken because the wages is a part of cost of goods sold, because the amount of wages will be taken in the cost of goods sold and the depreciation amount will be taken in the amount of operating expenses. So reducing it will be get the profit like this. So for today, thank you.